All right, bull runners, welcome back to the channel. So we have some massive news taking place in the crypto market right now. Hope you guys are having an amazing Tuesday or Wednesday. I don't even know what today is. I woke up today feeling great. I hope you're feeling blessed. As always, comment 777 if you're feeling blessed, if you're feeling bullish, if you're going to become the first millionaire in your family tree. You know what to do. Take that like button, grab your putter, give it a tippity taparoo, and just sink the putt, because we're beating the SEC and we're buying grandma's house back with XRP. So Bitcoin and other major cryptocurrencies, Ethereum, XRP, and other projects like Chainlink, Solana have absolutely rocketed this month. Although a Federal Reserve flip could be about to cause chaos within the crypto market and the stock market, in this video, we're going to discuss how crypto is decoupling from the stock market and what that could mean for you and your portfolio, on top of bonds and some other big news taking place with ETFs. Now, what's happening here is analysts have predicted that the Bitcoin price could surge in 2024, driving it to $150,000 per Bitcoin by 2025, and giving Bitcoin a market capitalization of about $3 trillion as a flood of Bitcoin spot exchange traded funds hits the market. So the US wealth management industry will likely be the most addressable and direct market that would have the most net new access and accessibility from the approved Bitcoin ETF. This is what Galaxy Digital Research, an associate with them named Charles Yu, wrote in a note, saying that as of October this year, assets managed by broker-dealers is around $27 trillion, around banks is $11 trillion, and IRAs is around $9 trillion. Now, collectively, that's totaled about $48.3 trillion. And post-Bitcoin's halving, we expect the Bitcoin spot demand via ETFs to outstrip miner selling by 6 to 7 times at peak, a Bernstein analyst wrote. And we expect Bitcoin ETFs to be equivalent to 9 to 10% of spot Bitcoin in circulation by 2028. And so Charles is predicting the SEC approval of a Bitcoin spot ETF would almost add about 75% to the Bitcoin price within a year, potentially attracting over 14 billion of inflows. And he's saying that the move would put the Bitcoin price around its late 2021 peak of around $70,000 per Bitcoin. And also, Kathy Wood, CEO of ARK Invest, is saying they are about 99% sure a Bitcoin spot ETF is coming in 2024. And the third deadline for 21 shares in ARK Invest is November 11th, coming up in just a little over a week. And then the final deadline for the SEC to confirm or deny is January 10th. So the most likely case is January 10th. We see ARK Invest get approval by then. Now, obviously, there's no guarantees, but if she's 99% sure, she probably knows someone on the inside. They've already worked it out, and the retail investors are just going to hear about it later. And so you have to operate as if they're going to be approved, but you also have to prepare for it not to happen and for this just to be a lot of hype flowing into the markets right now. And when we look at Bitwise, well, their deadline is January 14th. BlackRock's deadline is January 15th. And then the floodgates would open for a blanket approval if we see ARK Invest get approved. Why wouldn't they approve BlackRock? I mean, the Finkster, love the guy or hate the guy. I don't know him personally, but I guarantee that dude's got more pull than ARK Invest because they have over $9 trillion assets under management. So I would expect a blanket approval for all the other ETFs after that. So a floodgate of institutional money has been entering the market all through October to get ready for this. And so smart money has been accumulating this whole entire October, and they have been selling out of the stock market. So for those of you wondering, why is this even a big deal, and why have I been screaming at you from my balcony for the past few years, let alone all through 2022, talking about crypto when the markets have been going down, when 99% of retail has been leaving the markets? I've been in the markets, you've been in the markets, and we've been backing up our truck all the way to the bank. Why is this happening? Well, although there are already futures ETFs, spot ETFs hold actual cryptocurrencies, and they're considered more important for a variety of reasons. Firstly, spot ETFs provide direct exposure to the underlying asset. So in this case, it's Bitcoin itself. And whether you think Bitcoin is as an asset or not does not matter at all. Your opinion is completely irrelevant. My opinion is irrelevant. It matters what it's registered by law and what it's declared by law. And so Bitcoin itself, without the complexities of future contracts, in this case, this can be more appealing to traditional investors and institutions seeking a straightforward way to invest in cryptocurrencies without having to have self-custody. Now, personally, I don't know why they wouldn't want you want self-custody of your own crypto, but when you're moving billions of dollars around, and you don't want to go through an exchange like Coinbase and deal with their stupid fees, and so you're doing private deals behind the scenes where you're just buying from whales that have held since 2012 at a deal where you're getting a discount of like 3 to 5%, and that doesn't move the price in the market. So those types of deals have been happening, guys. Secondly, the potential approval of Bitcoin spot ETFs in the US is expected to open up the cryptocurrency market to a massive influx of institutional capital. It's already happening. You can't even deny it at this point. When institutions pour money into the markets, the top altcoins like Ethereum first, then XRP, Solana, Chainlink, Dogecoin, even Shiba Inu, Cardano, Matic, XLM, tons of other projects skyrocket even more than Bitcoin because they have much smaller market caps and they take less money to grow. For Bitcoin to 2x, we need to see half of $1 trillion flow into Bitcoin to see a 2x. So yes, I do feel that Bitcoin is going to perform well. I do think Bitcoin will actually outperform a lot of altcoins in the start, but then Ethereum runs and then the altcoins will outperform Bitcoin in the end. And the number one project I think will perform the best in the large caps is obviously XRP for common sense reasons we've been covering on this channel. So the US wealth management industry with trillions of dollars in assets could gain direct access to Bitcoin through these ETFs. Plus, just recently, Coinbase Financial Markets, CFM, now lets US retail crypto traders access regulated, leveraged crypto futures contracts, making it easier for them to manage risk, diversify their portfolios, and trade with leverage. Now, this is significant because what it's doing is it's empowering everyday investors with tools that were previously only available to institutions, attracting more people to the crypto market and allowing Coinbase to gain more market share. However, there's obviously risks associated with leverage. That should obviously be understood because it contributes to a broader crypto adoption by democratizing access to advanced trading options. But if you're new, you have to be very careful trading with leverage because you can get wrecked and you can go in a lot of debt if you don't know what you're doing. If you're signing up for accounts that give you like 100 to 1 to 100 leverage, right? And the last bull run was fueled by leverage trading. And this run is going to be even crazier with institutional leverage as well, too, with billions of dollars in leverage rather than just, hundreds of millions of dollars or even like thousands of dollars from retail. You're talking BlackRock. We're talking the big dogs coming in with trillions of dollars, not just billions of dollars, actually. So the elite, they want to make as much money as possible out of these markets. That's why we're seeing a decoupling right now because the stock market, it's past its prime. Stock market's been around for a long period of time. It's over $70 trillion. The Federal Reserve screwed all the billionaires over because they raised the effective federal funds rate at the fastest pace in history. They all understand that. Billionaires and trillionaires understand that. So they're pissed off. Why are they pissed off? Well, imagine being a multi-billionaire. You're sitting on 5, 10, 15, 20 billion dollars, and you're raking in billions, hundreds of millions to billions of dollars while interest rates are at low, while loans are cheap, and you don't have to pay back a lot of money. You could scoop up as much real estate as possible. You can do these big deals, and you're just cashing out while markets are good. And then all of a sudden, the Fed decides to cut your profits by raising interest rates, tightening down to fight inflation, and then you're having to get crafty here. Now, then you're figuring out other ways to make money, and that's exactly what they're doing with the crypto market. When someone tells me, crypto is too risky or that I'm too bullish on crypto, think about this. The market of the entire crypto industry is only $1 trillion. Gold is over 13 trillion. Stocks are over 70 trillion. Bonds are over 60 trillion. Global real estate over $300 trillion. And the derivatives market is in the hundreds of trillions, arguably in the quadrillions. So you're not bullish enough. And it's actually riskier having money only in other markets and not in crypto because they have further to fall when trillions get diversified out of those markets, out of mutual funds, out of 401ks, IRAs into crypto. It's going to be insane. Now, this isn't financial advice. I know I sound like a permabull. I actually want to hesitate you as well, too, and give you a realistic and grounded approach here because I'm not a financial advisor. This is not financial advice. As always, do your own research. Don't buy or sell anything we talk about in this video or on this channel because it could all go to zero. But check this out. BlackRock provides mutual funds and other investment vehicles that individuals and institutions can include in their retirement portfolios. So when their retirement advisors are telling Uncle Bob that they're going to be diversifying his retirement account into Bitcoin, what do you think that creates? Well, that creates a wave of retail interest. And then retails, they start flooding into the market, scooping up crypto from centralized exchanges while the institutions have already positioned themselves just like they're doing right now. Then we start to see Google Trends skyrocket in search terms. We see the keyword research go up on YouTube. We see social media posts start going crazy about crypto. And then all of a sudden everyone's piling in. And by then, it's not that it's too late, it's just too late, right? It's not the best time. The best time is when nobody cares, and that's when you have positioned yourself properly. Now, if you're late to the channel and you're watching this video right now and you're wondering, is it too late to get into crypto right now? Well, let me address a few things, because the challenge here is how much will the crypto market decouple from the stock market? Because stocks have taken a beating since August this year, whereas crypto is that flight to quality, as Larry Fink, the CEO of BlackRock, said. And the Federal Reserve, they just decided to pause interest rate hikes for the second consecutive meeting at their FOMC meeting that just happened. And for much of the last year, the Fed has engaged in an aggressive tightening campaign on their balance sheet to lower inflation. Now the agency has opted to pause interest rates for October, as they did during their September meeting. And the 10-year to 2-year Treasury yield spread is turning around and is about to breach back into positive territory, meaning that the 10-year would outperform the 2-year bond yields, which may seem like it's good for long-term bonds, but it's actually not good for the stock market, because the past 2 times that this has happened, the stock market dove, over 40% and over 50% during the 2008 crash and then during the 2000 dot-com bubble boom. So whether it happens again and how far down the stock market would crash is anyone's guess, but it's like a self-fulfilling prophecy for a market crash, because smart investors in the markets are looking at a chart like the 10-year to 2-year as a signifier of a coming recession. So what they would do is they would sell out of stocks to prepare for that recession, and that creates a domino effect of then everyone selling stocks in preparation of it. So it actually happens before the market crash takes place. And the real question is, how would a stock market crash affect the crypto market and the precious metals market? Well, according to this chart from the block, which shows the 30-day correlation to Bitcoin for the S&P 500 and gold, we can see gold completely separating itself from the stock market on October 18th. And the S&P 500 crashed over 6%, whereas gold rallied over 5 to 6%. And Bitcoin rallied over 25%. So this past month, Bitcoin and gold are decoupling from the stock market. And up until July of this year, one could argue that the stock market was pretty correlated to crypto, because when we saw the stock market crash in 2022, we saw the crypto market crash. And then while the stock market was recovering, crypto was recovering and has been pretty correlated. But October really turned the tide. And if the S&P 500 can't hold this upward trending support, the next stop is all the way down to 3,900, which is another roughly 7 to 8% drop from where we are today. So since September 5th, the S&P has dropped over 9% and Bitcoin is up over 40%. Now, if we see another roughly 9% drop for the S&P and Bitcoin continues to decouple and performs the same amount with another 40% move, well, that would put Bitcoin at nearly $50,000. Now, that's not a guarantee, because obviously anything can happen in these markets, and at any moment, Bitcoin could become correlated to the stock market again and crash with it. But the signs are all lining up for a bullish fourth quarter for crypto. So what I'm expecting is these ETFs to get approval. The markets are rallying into that news. And when the ETFs finally get approval, I don't expect it to have as bullish of an impact on the markets as people think, because the bullish impact always seems to happen before the event or the news takes place, because people are buying the rumors right now. That's what's happening, because nothing's happened, right? Why are the markets rallying when the Fed, is paused and people are worried about a recession? What's happening right now? Well, BlackRock's coming out in the news. Rumors are spreading about an approval, and people like Kathy Wood, the CEO of Ark Invest, is saying things like, we're 99% sure. Like, where do you get that statistic? 99% sure. You know, it's like you can make up a number and say, I'm 87.375% sure based on my analysis, and your analysis is just some number that you made up in your head. So these are rumors right now. So what I would expect to happen is, yes, I do think Bitcoin's going to rally. And when the ETFs get approved, I expect there to be a crash. I expect Bitcoin to come back down, consolidate sideways for an extended period of time, and to not pass its all-time high until 6 months after Bitcoin's halving. So you are early right now, my friend. So do not FOMO. Don't let your emotions get the best of you, and be prepared by educating yourself on a consistent basis by subscribing to the channel, liking this video, because we're working on a list of our top 100 projects that we're the most bullish on, from the teams, the fundamentals, the tokenomics, and all of that good stuff. And if you want to see that list first, then all you need to do is get on the early bird list at bullrunners.com. Put in your best email address. You're going to get breaking news and videos like this before the algorithm can push it out there, because by the time you watch this video, the markets might already be rallying. And when we start talking about these projects, it doesn't mean that you should buy or you should sell these projects. It just means that these are the projects that we're the most bullish on, that we're personally holding, and what you choose to do is up to you. So you can get on that list at bullrunners.com. You know, as always, what we're doing in these markets is we're backing up our truck all the way to the bank. We're grabbing the bags, we're packing them and stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation, blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest right now. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. So I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.